Okay, hi there, guys. I'll just I'm just getting myself organised and watching the hang sing. So had a couple of trades on that, and then the latest one went on without me. Thought it was time to close down. Otherwise, I get caught up and forget all about the stream. So we'll run through those entries. I'll talk through them, um, the thinking behind them. Markets are fairly bullish at the moment, and I'm going to need some water. Just 1 second there. Just be a tick. Okay, back. Just in case I get a croaky voice, I've got a bit of water ready to go. So who are we got in today? Just let me know if I'm coming through okay. Just to make sure my sound is good. Welcome one and all. G'day, Anthony. How are you, mate? All right. I'll get up and racing. So we'll start off the markets on Friday. It didn't do a hell of a lot. We had the Nasdaq, which sold off. They were pretty much going in tandem. They did bounce some. I think the Nasdaq bounced into close. It still ended down. There was a bit more pressure on the Nasdaq than the Dow. The S&P was dragged around, but price action essentially the same. The Dow did end up with some gains, but I think they didn't sell down as much. Obviously, people were more concerned with. G'day, Pete. More concerned with the overall market. So the tech shares again coming into Friday, but they seem to bounce. So we'll go over that shortly. Just the indices, and I mean a lot of people. I think I was talking about this on I was on that the Spotty TV things that I've been getting into, the interviews or the talks, just about people getting too concerned with, everyone's waiting for that Nasdaq to get hit, and it has been hit many times in the past, and then bounced. So is it the same as what we're looking at before? We're finding, it's going to come a time it's getting more and more stretched, but it's what's going to trigger that sell-off. And I think when you do see it, you're probably going to be sitting there waiting for another bounce. It'll be the time when you get sick of selling into it, and then it just keeps going down. Hey, Lauren, this is live, mate. I'm sure. Am I going live? Yep, we're up and racing. So don't say anything rude. All right. So yeah, the Nasdaq not particularly strong at the moment. It's a bit of a correction, but there's a few key things we'll take a look at in a minute, just from a technical point of view. The S&P obviously getting bullied around by the tech shares as well. But yeah, that Friday, I think Europe was down a bit. They've got quite a few political issues, as in traders are looking at political issues. You've got Brexit maybe falling apart. You've got issues between China and the US, obviously, and then coming into elections. Oh, we don't know how that's going to affect the markets or how the market's going to take it just yet. It may be. I think the market's a bit of a holding pattern at the moment because the bulls are trying to figure out whether they should just keep holding or is this going to be a serious sell-off. Um, People who are potentially waiting, bears are waiting on the sidelines too because they've been trapped a few times in the past and squeezed back out. So they've had false starts many times in the past, especially on the Nasdaq, and the indices thinking it's overbought, sold it, squeezed out, overbought, sold, squeezed out. So they're tentative. There's a lot of different people that are tentative as well. If you go to Spotty, you'll see it. I can't remember the dates. I've got one coming up on the 30th, I think. The next one's in a couple of weeks. Pete, sorry, just talking about Spotty, is in a couple of weeks. It's a good little program. It's worth watching it. Not just for my pretty face, but there's a few different speakers on there. A lot of it's based around the fundamentals of the stocks. They love having a technical guy on there like myself and a few others There'll be Nick Radge, I think, has been on there. There's a couple of other guys I know, technical based traders that have been on there as well. So it's worth looking into. If you just Google, I think it's spotty.com.au, you'll see past talks on there. If not, just email me, Pete, and I'll give you the link. So for anyone that doesn't know, also, we've been doing a intraday live trading through our Discord channel too. So if you don't know the link or you want to have a look at it, and you want to just have a bit of a squiz on what we're doing, it's just live trading. It's general chat. Sometimes, a lot of times there's nothing much happening, or we do jump in and out. Mainly the Hang Seng, maybe it's a SPY trade on the Nikkei as well, but mainly the ASX sort of day sessions. If that's making sense, it's our time zone, Sydney time zone. Pound US and a buy. Nice. We'll take a look at that. Just remind me, and I will take a look at the pound as well and look at the currencies as well. So if you don't know, if you want the link for our Discord channel, feel free to jump in. If this is your time zone and you're happy to be a part of that, just send an email to support@tradesetup.com.au, and I'll send you off that link, and you can jump in and have a bit of a look around. The more people we can build, the more community we can get, the more things we can look at too, because it's not everything I'm looking at. I'm sort of focusing on the Hang Seng during the day because there's some good action on that, some good trades. Also going to start looking more at the intraday. We're just looking at intraday shares on the ASX too. I know that's a big thing people are getting into. That's Afterpay just started to bounce. Actually, doesn't look too bad. Looks a bit more bullish, but BRN is just something. I was just looking at this morning. I didn't jump in short, but I was looking at a short. I think that sell off just from the open. You can see that it's a 5-minute chart here, the one, and just seeing a few different things that we watch, and mainly on the shares, the depth. If it's stretched on the open, you've got some good news coming out, but the previous couple of days have been selling into from the open, and there have been a couple of red days even when it's gapped up strong, it's been sold into. So it's a stretch market. All these sorts of things we're looking at. As soon as you see someone was lobbing on a couple of 100,000 on the bid and it got sold, bang, got hit, swept up pretty quickly. So in that respect, that's something you want to take note of if you're looking to short. So we didn't actually trade that, but that's the kind of thing we want to talk about more of. My background intraday is mainly on indices, not so much into shares, and I know there's some good opportunities there, and I'm probably going to start focusing more on that as well. We've also got a lot of our shares, especially in this current environment, we're not doing a hell of a lot on the longer term stuff, purely because I'm not seeing some fabulous setups. They're grinding. The ones we do get into not kicking off, especially at these levels. As the markets goes, a bit of a sideways consolidation. Maybe there's going to be a sell-off, maybe not. We don't know, but I don't think the market's showing us some really good signs of just charging higher. If anything, the index itself is staggering a bit. And if you go to the daily, that's what we're talking about, that bit of a sell-off. It's a bit of a grind. Doesn't mean it can't ramp up again. But if we don't have a bit of a pop-up, then there might be some more bearish action as people start, and it may be some acceleration to the downside. The weekly's not looking too crash hot in the ASX either. Last few weeks, I didn't notice that, but the last few weeks have been down from open to close. Red candles, there was a week, 4 weeks ago, so it was just hovering around those highs just above 61. Open and close, roughly the same spot. Last few weeks have been down, so we'll see what this week brings us as well. So yeah, that's everything we're doing at the moment. What I'll do, I just want to go over the intraday action as something different, because not much has changed from what we've been looking at, what we've been focusing in on, in the way of copper, crude. Not a big move, US dollar sort of above that 93 mark. I don't know where it is exactly now. Let me just see. It's probably 93.20, so it's still hovering above the 93 zone. So yeah, all these sorts of things, we'll take a look at it again in a moment and then open it up so you guys can actually ask some questions. What do you want to look at? We've got crude. We'll look at the pound first too. But just to start with, I just want to go over some the intraday stuff just on the Hang Seng. So what I was looking at on the Hang Seng to start with was the fact that we've got this index. So the market's opened up quite strong. We don't know why the markets, I can't put my finger on it, why they're strong on the open, but the Nikkei opened up strong. The SPY blew through some resistance zones, all on the open. So the Hang Seng actually opened up strong at 11.15 as well. You got this bit of a grind high, so we can see, with this level through here, 24,600, say. All right, so it's opened up there and it started chopping around there. But then you've got another level above it. So if the market doesn't sell off, you don't get a spike through and some heavy selling into it, trying to protect that level. There's a good chance that it's going to pop up to the next level, especially the Hang Seng, because it can move quite easily. A few hundred points is not a lot to the Hang Seng, to be honest. So that if we're sort of sitting around 24,600 and the next level up is 150 points away, it could easily go there. But you just want to make sure that you're trying to sit there and you're watching that it's being soaked up. And what you can see, this is a 5-minute chart on the index, which opens up at 15 minutes later at 11:30. You can see you got that expansionary candle higher. Okay, then it started drifting lower. It had a bit of a go here when it's a green candle on the 5, and then it sold off again. And then the next few candles actually started to hold, and especially you got this one candle at 12 o'clock. It rejected those lows, just whipped out through that level, and then finished in the green, which is a good sign that, okay, we could be sticking to these MAs. The trend is up. We are going to look to hold this level and start to lift up to this next level, which it's since pushed straight into the level, and it's now rejecting off that level now. Now, it doesn't mean that, it's a selling opportunity, because it's the same. This kind of pattern that seems to be playing out is similar to what's just happened before. It's just that it's more, rather than the unknown, it's more the known where we are at the moment. So back here, what we're looking at, if we just go back to the 1-minute chart, was this kind of action. You got this press up here, spike, and then you can see that selling there is not conducive to me of a sell-off, if that makes sense. We're not seeing serious weakness. And then if you start to trade through a level a couple of times, trade at a level a couple of times, and this is the swing zone. So if we just delete this out, I'm just going to take that out to make this a bit clearer. So we know we've just discussed what the actual physical index was looking like doing. It's opened up. The index itself, which opens up at 11:15, it's opened up strong, backed off. So you're going to get that anyone that's bored at just on the open got it on the match or something, being squeezed out in a bit of a pullback. But then once that pullback starts to stick, like we saw in here, there's a chance that we are going to start to push to highs. Okay, so if the sellers are not coming in strength and buyers are still stepping in slowly, what that'll do is trigger more buyers into action, like ourselves. We were looking at this and push some sellers, put them back on the sidelines, potentially just going, well, if it's not going to come down here and we're starting to hold some of these inside higher lows, and then you get this expansion high, then we've got this grind, then we're holding this zone through in here. Why would I want to go short if we look like we're going to expand up to the high, especially remembering what we're looking at on the index itself? So I think for me, I had one long in here, but stopped, and then straight away it started to set up again. So I went long, took this rally up here, did okay on that. So net on those two was up. And I think I did the same thing essentially. I went long somewhere, I think it was in here. Yeah, I think it was in here, and I took it off. I didn't get stopped out. I took it off because it wasn't setting up. Then I went long again and just caught the drift higher, so made it back again. So only made net, I think, 2 wins and 2 losses. And I did have a scratch somewhere as well. I think I went long and scratched it as it pulled back to my entry. I can't remember where that was. I think it was somewhere in here, going long here, did nothing and sold it off. And we come all the way back down, retested the lows and started to lift again. You can see the thing is we're holding these MAs. Okay, so this is what Lauren was talking about on Friday. This is the 10 and the 20 EMA, but I'm using the whole moving average, so HMA of 20, which I think sticks to the zone a bit better. It sticks to the action, the live action, whereas the EMAs, it's showing it's potentially up, and what we're looking for is you're looking for when the market it's contracting, expanding, contracting, expanding. That's all the markets ever do. Goes from contraction to expansion to contraction to expansion. Now you don't want to be buying into contraction. You want to be buying into expansion higher, or the reverse for the sell. You don't want to start to edge higher and you're trying to sell it. You want to be looking for those opportune times when it's starting to expand, and you want to jump in when the action is unknown. Okay, so this is in here I was looking to hold that MA. We're looking to in there, took the opportunity, didn't work out the first time, worked out the second time. You can see it's starting to lift. That was okay. Then we got more contraction in here, back to the MAs. MAs are still up. The 20s above, so the 10s above the 20. I normally use a 20 and a 50, but we're trying out the 10 and the 20. You want the 10 to be above, so the faster moving above the slower moving average. As long as that should be biased up. and you're looking to buy into expansion again. Now, if that breaks and they start to cross, then you're on the wrong side and you're just looking to see what happens. Whether it's a deeper correction, it's going to start to set up again, and then they start to get cross from, when the MA is crossed down and they start to cross back up, then you're looking for that shoulder. Once they're pointing back up, a shoulder in here, like this is consolidating sideways, but essentially that's a higher low, that's a shoulder, you're looking to buy the break above, and that worked out as well. So you can see that it was holding the MAs, looking quite good, and probably the prime trade in hindsight was this move here, but the problem with that move, buying into that move, it probably matched up quite well with the index itself. So the index was somewhere around here, went sideways. There was no real resistance in the way of that, or you probably had something chopping around here. But the way that was holding up there, and you're looking at the 1 minute on the futures or the CFD, you could sort of negate that level there on the index, because it's the index we're sort of concerned with. We're more concerned with what the index is doing, where it's going, and that expanded higher. So you've got to be wary if you were trading that long. You've got minimal risk, and the fact that it could just pop up to these highs, you might get the index expands just a bit and then fades, and then you get stopped out. But looking at that price action, and with the anticipation that it's going to trade up to 24,750, you know that if it does, there's a lot of room to move on the upside, and there's some good gains to be made. But when you obviously get there, when it actually did play out, just be wary that now we're at a different level. We're at a key level on the index, key highs. Just be wary. Any sort of sign of pullback, you might want to bail. All right, so that's pretty much what happened before. But we're trading off the same theory. This is the same as the way you would trade your daily swings on the ASX. You might trade your currencies. I mean, this is the way I look at my currencies as well, off key levels. Your indexes, everything, you're looking for those shoulders. You're looking for, and the MAs to start to spread on the upside or downside. If you're going long or short. But if you're going long here, you want these MAs to be, you want to basically be above. I like to be above the HMA as well. Trend lines. So I've got these indicators are basically the 10 and the 20 exponential moving average, and I've got a 20 HMA, which is a whole moving average. And the longer term one, I don't know what that is actually. I've got that on there. I think it's 150 weighted moving average, but I don't really look at that as much. And then really it's just the MACD and the stochastics on there, which I glance at just for momentum. As long as it's above the zero line, the MACD, I know the momentum's basically up, but the trend's telling you that, the EMAs are telling you that anyway. The 10 above the 20 and so on. Even if you're using the 20 and the 50, which we use a bit, if the 20 is above the 50, you want to be biased up and you're looking to buy in those pullbacks when they start to lift. Buy in the unknown, look for that expansion higher, that continuation trade. But always making sure you've got your key levels marked prior. Okay, so this move up here has just cleaned out this zone. You can see this zone in here. So anyone that was short from Friday night that was holding on, you know that they're fighting to get squeezed out, and you could go to the next level and so on, and above that as well. So that was the basis for those trades. Any questions? Anyone want to ask a quick question just on that? I know we're all sort of, but I'm a firm believer that price action for me, whether you're trading indices you might attack it slightly different, but generally you're looking at the price action. Who's winning out, buyers or sellers? Which side do you want to get on? Where are you in the way of? It's probably a bit easier when you're looking at ASX shares, because resistance zones don't mean as much as they do on indices and FX. In the fact that they're generally biased up. You've got the indices that are heading higher, all those sorts of things. They're generally made to go up. The indices are made to go up as such. But intraday, when you're trading off, or shares are made to go up, they don't pull back as quite as easily as the index or a currency. So when you're looking at the indices, intraday, just realize that key levels, they will react off those key levels quite easily. Okay, when you share and it buys into a key level, it could just keep blowing through. It generally, when things run out of steam on shares more than anything else, and they get a bit extended, and people want to book in some gains. We can spit that out. Okay, so we've got. We'll get into that issue in a minute. APT and FXL. So what I'll do now, I just want to go over. We'll get rid of this. We'll pop that up. And there was a good entry too when we were looking at Friday's action. don't know if it's here or I think it was in here somewhere on the index. No, it was after. Oh, I can't remember. It might have been after 5. So this is on the Hang Seng, the index. It started to lift. No, we knocked off. We knocked off around 1, I think. 12:31. So it was around here when the index started to lift and it was sitting above the MA. So there was a good opportunity just into 2 o'clock for a buy if you look at the short term. So if you go back and look at that on Friday, it was pretty choppy up until then, but it then started to lift into the close at 2 o'clock, which turned out quite well. All right, so we'll go over. I want to go over the longer term on the Nasdaq, because I think that's a key index at the moment. Let's look at the daily. So you can see the one thing that if we are right and we're looking at this, it's touched on that supports a few times, mainly late into that trend. This is the first time we look like we were holding a shoulder. I mean, it doesn't mean anything. You've got the longer term trend does up. It may just be a bit of a contraction we're having. And then people again buying into support those levels. But the way it reacted Friday, got bought up off the close into the close as well. It's not a bad sign that we could be potentially holding this inside level at, say, 11.065 on the Nasdaq and could lift. But this is probably the first time we've had a decent enough correction for a long time, really. But this, with regards to the pullback, if we look at similar situations, it's lifting here and we had a pullback and then lifted. So that might have been extended there. Then that's when the markets were still fairly negative and people were a bit concerned that we're going to go into a big pullback. It did stop and then lift again and squeezed out some shorts. Again here, if you change your action here, we sort of went sideways here. We broke down there. So if you're just looking at the fact that we're coming off the highs, thinking that we're going to get this big correction, you've been caught out a few times. So whether or not this is just another time on a different scale, on a bigger scale, and we're going to hold this inside level and lift again and go through these highs, we don't know yet. It hasn't given me any clear price action where it's broken down a key level. So this latest action on the upside, you've got a level, we just make that a bit bigger, in here, okay, which is really the anchor to this uptrend. And it's really just pulling back and holding above the anchor at this stage. And we all know in the way, what I live by with price action is if you're holding above the anchor, the trend hasn't changed. It could fluff you out. We might just be in a pullback mode. And a lot of people, because they're looking to be so, people are just waiting on the sidelines to be bearish on the market. They're looking at these couple of big days down, go, okay, this is it. This is the one. And let's dive in short, or let's close out of positions and turn around, and it squeezes back up again and takes out the highs and we go into new all-time highs. And then they're chasing the market. So what you're doing is selling on the lows and you're starting to buy back on the highs. So you've got to be careful of that. So that's why I think, for me, price action is very important. And this, okay, we've had a big move off the high, which probably accelerated because a lot of people were expecting that. But then the fact that we're starting to hold here, look, we could have a lift. And if we start to get back up through 11,560 or 570, this little inside high, I'll just show you that, up here, it opens up another move back up to the highs. Okay, if we chop around here and then we start to get negative, you get a bit of a flattening in the MAs, then we start to roll again. Yeah, it's starting to open up a bigger move to the downside. But I still think that this anchor, this minor anchor to the uptrend, you've got a press up here, a couple of days, pullback. Then we've got this big press up here. So we're coming in still holding above this anchor. You've got a major anchor down a bit lower, around 10,430 or thereabouts. This zone through here, which it could still pop through there, hold up there and start to bounce. And then you start to build for another good leg higher. And we don't know just yet. It's not showing anything clear just because we've had a couple of down days. So in that respect, let's look at the Dow. The Dow is still, it's potentially same sort of thing. If you sold the Dow in here thinking this is going to roll and then we got squeezed out, maybe you're going to sell the Dow in here thinking we're going to roll, but longer term, that MA is starting to pick up again. And we'll maybe just be contracting, either contracting sideways, and you get that initial thrust lower, which is a lot of bears diving in, trying to pick the top again and getting caught out, especially off this zone. When you can see anything on Twitter, you'll find any opinion on Twitter, in the news, we're going to get a sell-off. They love it. They would love to do that. But if the market's not ready, it's not ready. And we don't know exactly when it's ready until we get, I'd prefer to see something like this, good expansion lower and try to pop back up. and then you get that good sell-off. Now we could go through on the Dow. There is this level here, which I'd be watching fairly closely, which I am watching fairly closely. We start to power through that. Is that going to open up a bigger move to the downside on the Dow? But I think it's mainly going to be centered around that Nasdaq and an bigger unwind on the Nasdaq. The S&P, much of the same. You've got this as the uptrend. If that's the uptrend we've been watching for a while, are we unwinding there? The fact that we've sort of pushed through that support and finish back above it could sucker in a few shorts, and we turn around and squeeze them back out. So I don't see any. I would have expected, if we're going to have a bit of a bounce, a sharper bounce up, and then a good sell-off. Okay, but the fact that we sort of push down, we've got this one green candle, another red candle, and we've been hovering on the S&P at least, and the same as with the Nasdaq. We're hovering just above a key level or a swing level. Doesn't necessarily mean we're hovering above it, we're going to break straight through it. It could mean that we're just suckering in a few sellers. We're going to drag them back up like it's done many times in the past. With the ASX, let's look at some intraday. I'll just go down to the hourly. Although this is not strong, it's not conducive to a big sell-off. It looks like we have this sell down and we bounce back up, another sell down, bounce back up, so that the market's pushing through the lows. It was probably up here was a big one. That was a big move down, and then it's bounced back strong, and then we've come back. And if the bears had some sort of conviction, you really should have pushed through the lows a bit more before you got another bounce. And then we pushed through this low only slightly, and then got another bounce. I mean, the bounces are still quite, in respect of the move down, are still quite good. But the moves through the lows, when you take out the low, they're only taken out by a few points. So to me, that's not a massive reason to just dump in short. It's not a good reason at all. You want something like this, you want it to move through the lows and not bounce back as hard. So if you're looking at price action itself, when you get a move through the low, like a good extension lower, you don't want the market to bounce all the way back. I'll just draw that up properly. You don't want to bounce all the way back up to roughly, to the high. So like this one here, you've got this good move down, and they've got a big bounce back up here. Good move down, and of this leg down, and we bounce back up. Okay. Does that make sense? So the pullbacks are quite savage too after taking out the low. So it may just be that the market's cleaning out. It's cleaning out, putting some people back on the sidelines. But it's not willing to go down yet. Okay, we can drift lower, and then we can turn and ramp back up and go straight through that 62 zone on the ASX. So there is, and we've had this big uptrend. We're going sideways at the moment. We are, to me, overall, when you look at that on a daily basis, we are going sideways. The last couple of weeks haven't been so great. Doesn't matter. Okay, we're just coming down into another support zone. And we've done this kind of price action before, if I can find it. We've had this pop up here. We've potentially going to roll here. And instead of rolling over, we've launched back up again. So we could be doing that same thing on a bigger scale. Okay. So that's what I'm looking at. I'm not willing to dive in short anywhere just yet, but it's just what it is. That action's keeping me out of some longs on the index. So on the individual stocks. Anyone else feel that the market's it's struggling a bit at the moment, whether we're going to get sideways action or we're going to start to range trade? I mean, there could be a big range in here, say between, this is on the index anyway, so on the ASX, between these highs at around 60, was it 61, just under 62, and potentially, you can even push that out to lows around 57.50. We could just be range bound at this stage. I mean, this kind of move is going to sucker in a few shorts, and we turn around and squeeze them back out again. Okay, so that's my feeling. So I'll go back to here. What I was saying with a pullback, if you're going to get some sort of action, why it's not all work? Here we go. That's your pullback. So we've had this big move down. If we get some sort of action which is kind of contained on the upside, and we don't get too far, and we mentioned this many times, sort of the bottom third of that move down, that's more weakness I would expect to come in. You got buyers starting to soak it up, but there's strength in sellers. They're still hitting that market, hitting the bid, or there's still pressure in that market, even if it's grinding higher. Now that's different to that kind of a pullback. This kind of a pullback is not too much selling strength. So when you're getting, if we go back, these kind of good moves back up again, there's not a serious amount of selling strength in there, and then it comes down and crashes through the lows before we get another pullback. So this move down here, we've reversed probably 80% of that move. This move down here, we reversed around 50%, 60% of that move down. This move down here, we probably reversed the same, 60% of that move down. We've had a little push down here, took out the lows, and we're still reversing about 60% of that move. So to me, that's not some serious strength just yet. Okay, serious weakness just yet, sorry. But I'm not going to jump in long either. So we'll see how that plays out. And if you go and look at copper got held up okay. Look at the dollar index actually. Copper got held up okay. There's still some bulls willing to support that, some buyers willing to support it more. So if the market's not going to, if it's going to chop around in these highs, it looks like the market's anticipating a break into new highs on copper, and it's the supply and demand, well, the supply concerns that's keeping it up and keeping support. Now, supply numbers start coming up, then you would expect some of those longs to be squeezed out of the market. But at the moment, they're lacking supply into copper, whereas oil is not, as the opposite. So that's why oil's, that supply concern, the number of supply, they're actually trying to cut production just to ease off on the supply to make sure that they can support prices. So it's a bit different dynamics to what's happening in copper at the moment, but still it's US dollar based at the moment, and US dollar is still holding above 93. We've got this longer term. Let's just go out to a daily. We've had this big sell off here. You've got this press up, consolidation, extension down, another extension down. So whether or not we're going to break back up, we're going to get through 94 is a bit of a concern. We've spoke about this many times, saying to cap that move at 94, I would expect stimulus to come out. They're having problems getting through stimulus through government, through US Congress. So if that's the case, is how many of these shorts are going to start to get squeezed out of the market? Because there's quite a few that have built up after, not just in the first move. So the first move drags in a few, but then you get that consolidation, and then anyone that's waiting for that shoulder, like we potentially do, and you get that secondary sell-off, that's going to drag in a lot more shorts. So there is quite a few that have been lined up over the longer term that could be setting to get squeezed out on a pop-up through 94. Now, if we hold that level, we hold in here, it could take a bit of a nosedive still. But at the moment, I'm seeing a few factors that look a bit supportive of the US dollar more than anything else. And if you go and look at gold, we look at gold too. Gold, it's this uptrend here, we're consolidating. Now, there's lower highs pressure in this market at this stage. And that's, if we get a rally in the US dollar, I would expect gold to start tipping over. Okay, I'm not too worried about the gold bulls. There's all these supply, demand concerns, but the problem is if the US dollar kicks higher, and the gold keeps reacting to that US dollar move, not so much anything else, then I'm expecting that to potentially push through this zone here around 1910 and just squeeze out a few buys that have built up through here. Whether it goes on with it, we take out this low at 1860 and we have a deeper correction, I don't know just yet. But the longer term trend, if we just mark that up, the longer term trend is still, there's an argument to be made that we could have a massive correction back below 16. I don't think so. But you don't write it off just because everyone's talking up gold. Now, it's probably one of those markets. I think gold, you can find a hell of a lot of bulls. Just they're constantly bullish on gold, and they're spruiking it now. But there's been many times when gold's done nothing, and they're saying this is the next big move up. We're going to get a big gold run. We go back up through 22. Now the market, with all that sentiment, talking it up and talking it higher, there's a lot of reason to believe for me to think that it's going to pull back and just squeeze out those people. I don't think there's going to be much talk of prices going higher. You're either in or you're waiting. So anyone that's in is potential to get squeezed out on a pullback. But again, I still feel that it's got to do with that US dollar. So that US dollar creeps back below 93, then that's going to be supportive of gold, which it is creeping down again. It was about 27.30, 93.30, 93.27 earlier this morning. That's not really a move, but if it starts to edge higher, edge lower into the European Open, then that you probably find that gold will pop. It might drag in a few buys, and then we turn around and we get a US dollar rally at once 11:30 kicks off when the US opens, and then the market kicks off. So the US dollar kicks off and gold just gets smacked out again, which happens a lot. There's two different sessions. It does one thing in the European session, and then it changes direction and gets buoyed. So the US dollar could get buoyed at 11:30 again and might just drift lower from here. Just look at that 30-minute chart. All right, so what I'll do, I'll get into your pound. All right, I'll just type it in here, 10 and 20 EMA. All right, so I'll get onto the pound. What have we got here? So what are you looking at on the pound? I'm in pound on the buy. To me on the 30, that's heading south. So depending on what time frame you're looking at, whether it's short term, long term, I think this actually looks pretty good. If you get into the 5, I'm guessing, more supportive on the 5, but then you've got longer term on. You go back to the 30 on the pound, you've got longer term weakness. So it could be something like this. You set up after hours, out of hours, comes in the European Open, bang, we come down. I think Brexit is a big concern for the pound, and then its selling's going to continue until that my connection is slow. The pound, Brexit's still going to be a concern for the pound. Every time there's no, so I think as long as there's no news on Brexit, and at the moment it's negative, then expect the pound to go down. And it could just be suckering a few longs and then squeezing them out, suckering a few longs, squeezing them out. The way it's chopping around here, as long as it holds below 28.61 or so, which is a bit of an effort to tick up there today, but it could easily below this level. I think longer term it could be drifting lower. Now, if it gets up through there, you want it to get through significantly, so you sort of want a pop up through that zone, and you want to see what happens on the pullback. And if it starts to get supported here, and we get some sort of inside level to trade off, there's a lot of people, a lot of traders on the short side that could get squeezed out, and you might get a nice little run back up again, and back up to this zone at 30.27, say thereabouts, which look at maybe only 30, 40, 50 pips. That's pretty good. If it gets a bigger run on, we start to jam up through that, and especially if there's news on Brexit that says, okay, no, they're coming back, they're sitting back at the table, they're talking about it. Because anyone that's built up short for the negative reason that there's going to be a hard exit has to reassess this situation. If it looks like they're coming to some sort of agreement again, and then pop, you'll get all those shorts that are built up on the short side getting squeezed back out, and it could be a good little run on the outside. But for now, no news. I don't think it's going to be too supportive of because there's anyone that's longer term has got no reason to get out of their short positions just yet. Because if they turn around tonight and they say, no, we're leaving, there's going to be a hard exit, expect the pound to get smacked again, straight through 27.60, say, these lows through here. So we'll see. What else do we have? We had, who's put an APT? She wants to look at APT and FXL. Let's just get rid of that. So potentially we're looking for a bit of a squeeze up here. So if you're looking at the Hang Seng, it's supportive. Longer term, trend is up. If we get some sort of action around here and we start to chop around here, there could be another squeeze up back into the highs. But I would want to go off a higher low here because of the index has actually already hit that level we just said. Index has already reacted off that level. The fact that it's reacted off quite hard, and this is on a 30-minute chart, we could be coming to make a lower high. So just beware of jumping in. You want it to see if it does kick off and you've got these nice higher lows building on the futures. I'll get that up. Higher lows are building in here and they're getting supported, same sort of action. And we start to see, okay, you buy the break. Just be wary that you could get squeezed. So you've got to know your risk. You know exactly where your risk is, but it could easily blast off. And we could trade. There's a chance that we could trade up to 24.735, but I think it's now 1 o'clock, closes at 2. Maybe that level is going to stick today. We could be getting a bit of chop around here into the close at 2. When it reopens at 3, then you sort of focus more on what Europe's doing. So I think the best trades have sort of gone past us, but there's no reason why we can't chop around here. But you want this to pan out. This is a 1-minute chart. You want this to pan out soon and get another expansion up. And just beware if it doesn't kick on too hard, too quick, you might want to bail fairly quickly. Now that's those two. Let's get on to our index. No, that didn't trade. NEC still 71.5, so we missed that entry at 72 by half a cent, which is fine. Don't mind missing if it's going to go down, but I want to make sure we're still waiting and watching. So APT, which way are you based on this one, Nisha? Are you long, short, looking for a long or short? Are you looking for that to hold? So it's this 70 level off a daily basis. And feel free, guys, to put in some more shares if you want to look at. If there's anything else you want to take a quick look at. Let me just go. So the trend is up. Okay, that trend up is not broken on the daily. If we look at, all the reasons why you could buy or why you could sell, looking for long to accumulate more. All right. So we've got this zone through here, which is a clear support zone. Now, I would on the short side, I'll be looking for that break. I think there could be a bit of a flush through 70. We don't know yet. It's come off the highs. My issue is it's come off these highs pretty significantly. And the way it's sort of the first time, all this rally up here from that March low, I think it was a March low, has been fairly, pullbacks have been very, very shallow, if anything. More rally sideways, pullbacks have been shallow, like I was saying. That rally up there was quite significant compared to the previous rallies. And then we went sideways for quite a while, but then we lifted again. Then we had another good lift up to that 95 zone. So this is really the first decent pullback we had. So what I would like to see, the trend is still up. You've got the stochastics are suggesting that there's been some heavy selling pressure. Whereas before, last time we had some good selling pressure here, the market went sideways. There's been some heavy selling pressure here. The market's actually pulled back. It hasn't broken a key level. So there is a chance that, okay, if we hold up here, we're going to work back up to those highs. Right? If we start to break down through the support zone, that's going to trigger a few people to be concerned, I would expect. So the way I would approach it, if I'm going to look to add or anything like that, or to at least to start a new position, I want a complex correction. So, or I want something to come in here to start to build that base. I don't want to just see a V-shaped bang. I would never get into that sort of V-shape. I just don't believe it's a good sign that the market's going to go high. You want to see, because you would expect there's a bit of selling pressure in here. You want to see people soak it up with some inside levels, maybe a bit of chop, something like this, maybe a bit of a pop, and then some selling coming in. The selling comes in, it gets soaked up again, like we did here, and then start to get soaked up. You can see at a higher level in here, and then lift. That was a prime entry through. If you can see, let's just get that through here as a prime. You can see it was starting to lift. You know where your risk is. It breaks through. You got the gap, but all in all, it's worked out quite well. So you can see this section here, it was getting soaked up. Whereas we're coming off the highs still. We're still in a downtrend off the highs at the moment. So you want to see where people are going to start to step in. Now, if they start to step in here, you might find that between 77.50 and 70, we start to hold. I would suggest that we get through 70, that even number, there could be just a move down to test this low, and it might be hard and fast. We don't know. If it starts to get bought up off that level, above 70, like it reacted off there today, I think. Where did we get to today? We actually traded down to 70, didn't we? Let's just go. So it did trade towards that 70 mark, and it's lifted. I thought this might have broken around here. We might have rolled over and really triggered some stops through 70. But it looks like it's been bought up off that level, which is quite good. I mean, it's nothing to say that this is the start of a new move up. It's just the fact that there's been some shorts in here. We've got a squeeze. Shorts are taking their foot off the pedal. If we start to hold in here around 72.50, we might see another move back down to 70 into the close today. So that's just all your intraday action. But if you look at it from a daily perspective, I think it needs a bit more work to do around this level and over a few days, maybe a few weeks even, for me to be not concerned, but to be willing to jump in long. So you need more of a complex sort of a reaction to that low, rather than just, I don't think that's your 70 zone. We're going to bounce up and then it's on for young and old, and we're going to trade up through 95. I don't believe so, and that's purely based on this move down. It's quite a big move down to give up from 95 down to 70. Okay, so what's that? It's around 20%, I'm guessing. 20% move down. And that's a big fall from the highs. If it's a super strong stock, if there's people who are looking to continue to accumulate, some of the big boys might have taken that opportunity. They sold off. If they've been getting in all the way up here, then they've got some room to move. They're just taking some risk off the table. Now, if they start to soak it up again here, then yeah, a move up through 95 is on the cards. Right, so I think it's very important that we start to hold. I want to see that 70 hold. I don't really want to see, from a short perspective, yeah, I would probably be trading a move down through 70. If you see that intraday, but that's only an intraday basis. Now, if we start to hold up here, end of day, on a daily basis, the MAs are still up. You've just pushed through the MAs. We're not quite so you want to see them pop back up. So you want to see it more of this kind of thing. We're on the MAs, on the MAs, on the MAs, this kind of thing, which is done many times in the past on the MAs, even through here. You want to see it push back up, sit on the MAs start to curl back up again, and then you'd be looking to buy, I would suggest. What was the other one you want to look at? APT, FXL. To me, FXL is sideways at this stage. Sideways to buy us down. I don't know what you're doing on that one. Look for long to accumulate more. On both of them, Nisha, on FXL as well. If you go look at a weekly, let's just look at the weekly. So weekly, it's coming down. You've had some good selling pressure. Yep, because a good selling pressure here. Back down to the lows. Now, if this holds up around 1, it could be an opportunity to buy long, to go long. And on the daily, we're soaking it up. So that selling pressure that's coming, it's getting soaked back above 1. But at the moment, it's not something I would want to buy into. You can see that expansion higher, the first pullback. Okay, expansion higher, pullback, expansion higher. At the moment, we went to expand higher here. It failed, went back down to the lows. Tried to go again, failed. So at the moment, the weighted numbers I would expect is that the market's rolling, if anything. So if it doesn't get held up at 1, we could be looking back down to 50 cents. Okay, we start to see anyone that's been buying it on this move up and potentially buying it through here could get squeezed out. Okay, so that's if we start to break back below 1 and you start to get a shoulder trade. Shoulder, but by shoulder I mean a pullback. So at the moment, for me, these levels are through here. Say 1, maybe that $1 even zone. If that doesn't hold, you've got good flush here and rejection. You've got this level up here. Whoops, that's not even straight. Let's get rid of that. This level up through here, 145, which has failed. So really, this action's sideways at the moment. We're just the bottom end of that range. So it could be, but there is the opportunity that if we start to push through where we are at the moment, we're in those lows. If we start to, just do a different color. If we start to push through those lows insignificantly, and we start to grind back up in a couple of moves, I'll draw that a bit better. We start to do this kind of action on a pullback up, and we're still below, say that 1, then I'll be looking for, there's the potential that it could be a short. You don't really want to see that grindy action. You want to see it pop back above, retest it from above, hold that level, and then potentially look for a buying opportunity. So it's all got to do with this 1 or $1.10 level, whether that can hold. Now, if we start to hold that, you come into that level where we are now, and we start to hold that, chopping around here, then yeah, you want to see again as MAs start to roll back up. You want to sit back on the MAs and start to buy off the MAs rather than buy below the MAs. All right, so Pete, what do you got? HSN. Now you can see how you've got expansion higher, pull back to the MAs, it's stuck, it's starting to lift. That's ideally what you want. But something like this is probably ideal, after this kind of move up, it's pulled back, spent quite a bit of time. So time's always an important factor as well. The time it holds, it brings in more people that are watching it to start to guess, okay, if it's holding, it's holding, it's holding. The longer it holds, the more likelihood that anyone that has been waiting doesn't want to miss the boat if they think it's going higher. So time like that pullback there over a couple of days, spent the next basically month holding the MA, and then we start to lift. So at this time, rather than on this initial push higher, that's not really enough time, and that's why you got this move push back down. So you got that secondary move down, held the MAs again, and held what's that level? That low 375 in here, started to hold again, and when it started to lift again, that probably gives people would expect a lot more confidence to jump in. I mean, it didn't go very far after that. It sort of popped up, then got some selling pressure. But that's what I'll be talking about. Even on the downside, you can see how that expansion move down. You're going to get that bargain hunting that's going to ram it up, and it's held the EMAs and start to. Then you got this consolidation or a couple of red candles through here. Once you start to break out through the low, especially after that savage move down, anyone that didn't sell, and may be holding through here, is starting to think twice about it. Okay, so let's take a bigger view on HSN. Just looking at the weekly, it's at the top end of it range, sort of a swing high more than anything else in my book. So I wouldn't want to buy this. I think this is the kind of thing you want to buy down here below 3 off the weekly, and look for what sort of daily price action you got, which you got it okay, probably in here. So for me, this is probably the zone. You've got level in here holding, okay, after the push through that low. And this is an important thing. So that at this stage, yeah, we pop back up. Doesn't mean that we're going to go to the moon again from here. There is still some selling pressure. So you're sort of up against these key levels, swing levels, and it swung lower. Okay, so at this stage, you were expecting a break of that zone. Okay, that's just natural. You got that push down, swing back up, push back down. You expect that low. The fact that we held it in here is a good sign. So then this zone through here is a higher level than this zone, okay, which you can see. So it started to hold a higher low, which after all this, that's selling down there. Actually, that's probably just about, I wonder what that level is. Okay, so that's about at the same zone, isn't it? So the fact that we popped down here and it didn't kick on. So if you're nervous at a big sell-off here at this stage, and we started to get soaked up here, we had that rally, and then we've come back down and got soaked up again at a higher level, basically back at these levels. That's a good sign. So I think that's where you'd want to be going, and you could probably make a case for that. You'd probably go long. Oh, let's just draw it. You're probably going long somewhere in here on that break with your risk somewhere below, based on the fact that you're holding these inside levels. So at this stage, if you went long in there, you'd be the first port of call would be these highs. And it did react off those highs, but you weren't squeezed out, and it's gapped up and off she goes, and it's party time when you're up here. Okay, so that's where I would ideally want to have got in off the weekly charts. I mean, to get in now, when you've got that expansion higher, looking at these weekly charts, it's more of a place where they could find some selling. So if you didn't get in here and you've got in late in an extended market, if there's a lot of people, if there's not enough juice in the sidelines that are willing to get in, don't know what the fundamental picture is, fundamental story that should support it, I'd be thinking I'd be a little bit, if I'm not long, I wouldn't get in. If I wanted to go long, I'll be holding off. Okay, and if I am long, I'll be more than likely protecting the proverbial, because I think there could be a swing back down again. Now, if this move up here starts to stall around 4, what's the obvious target? And if we can't take out the highs from 410, you can see this swing up, pressures up. Okay, that's that rally. Pressure back down, got soaked up at 370. Pressure back up, and then it failed. Okay, we've got this move back up, and we start to fail. So if we start to fail up here, you can see that the liquidity is coming in here. But if we start to fail and we don't get to 420, when the stochastics start to roll up again, or they might get back above 80% on the stochastics, but we chop around here, I would be concerned that we're going to target a move back down through 370 just to clean out, because you've got all these buyers that might have been late to the party here. You've got your pullback. They would have expected it to go through 420 and go to the moon, and it didn't. The longer it spends below that zone, especially if you're late, means that there's going to be more people going to be thinking twice about holding. And that's, same scenario here, or not so much the same scenario up here. That's a prime candidate. That market was starting to head higher. You're going to move up through this previous high, failed, pullback, high low, great. High low is a good thing. Starts to press up and fail at a lower level here. So if you're long on this break, or even a break in here, I'll draw that up. I won't draw it up. You're long through these highs, this high up here, and you're long into this break, even at this break. And at this stage, we didn't get back up there. And you know, anyone that's bought here on this break is, prices against them. They're sitting on a small loss. Anyone that bought on this break may be sitting break even. But as soon as you start to sell off, that shouldn't fail. If it's a strong market, that should not fail at a lower level than previously. Okay. So what happens when you fail at a lower level? You start attacking the most recent high low. Okay. And if you start attacking that most recent high low, that's probably where your risk would want to be, because if it holds there and it pops up, great. If it doesn't hold there, you'd rather be out. And so that's the way I'm viewing this most recent price action. If the fact that it's gapped up, you know, here and kicked on, it's had a good little run up. We've pulled back, taken a bit of heat out of that couple of days, couple of green candles, a bit of heat out. Now, if it's a positive market, I would expect this to kick on and drive up, or at least consolidate. And you want to see some higher lows start to build. We might have a pullback to 390, 385, thereabouts, hold a higher low. But then for me, I would expect it to take out this high. Okay. Does that make sense? So that's the kind of thing it's all about now. If you bought late this trend, you've got to know where your risk is. And for me, you might have wide risk. I wouldn't have my risk below 370. Okay, below this low here. All right, so we'll see how that goes. It'll keep us up to date on that, Pete. We'll see how Hansen goes. What's that one? Chalice Gold. The Chalice Gold looks more supportive. I kind of like it. I mean, the fact that, let's just go, so it's here. Let me just quickly see where the Hang Seng is. Oh, it's about a bit of a lift. Yeah, I wouldn't touch the Hang Seng now. I'd be wary of that one. Anyway, we'll see how we go tomorrow. So what I like about this one, you had this run up. I mean, say you take all that as one leg up, then the market's grinded. It couldn't get through the highs. You got some lower highs coming. So lower highs should lead you to attack on these lows. You've got the market popped up, pull back, got through the high, didn't, when you retested this low in here, pop back up, lower high. Okay, lower high, we fail again to get to new levels. And you can see the market starting to sell off. It's got through this low, but it didn't get through significantly. It did get back down to here before we had a reaction back up. So this lower high in here, if the market was weak, I would have expected that to pressure right back down to fill that gap at, say, 60 cents. Instead, we started to get soaked up through here, you can see. And then the market's lifted, which is a really good sign. So if I just want to clean all this up. So now, at this stage, you've got this break up. Okay, then we've held this inside level. Okay, the market chopped around here, it did flush, and then it's lifted from here. So, you know, depending on where you got in, this is your shoulder still. Because all this action is part of 1, 2, 3, potentially that's your high low, and we start to go. Okay, so this is your level that you'd be concentrating on if you're looking for an entry here. You just want to see that hold up off that level. You don't want to see that tested or broken. Because if we do break through there, you might be looking for a lower high. The fact that we got held up, even though we broke through that zone at around $1, it got lifted pretty quickly. You might have had an entry through, you know, just on this green candle here. I don't know. Depending on how you look at it, probably I would have been left on the sidelines. I would have been looking for that break and then that minor pullback to buy in over a day or so, and then look for that lift. But either way, you can see the price action. You've got this move up, this pullback, high and low in here, which is key, and then we got another lift. All right. So all in all, it's looking quite supportive, I think, and maybe we're getting the same action here. Okay. Just clean this up again. We'll keep that level in there. So if that's the case, you've got these levels to contend with. So we could be backing off. We might flush out $1.35, but if we start chopping around and we hold above $1.35 and start to lift through $1.50, there could be a buying opportunity there. And then your first level will be $1.65. Now, if we fade at $1.65, then you want to know where your risk is. If we blast through it, that's a good thing. Okay, so what I'd ideally be looking for me, I don't mind if we do something like this again. We blast through, but we're holding the EMAs essentially at the moment. The EMAs are starting to flatten out a bit. They've lifted, they're flattening out, but they're not rolling. So as long as they don't roll, I don't mind if we get through and then we lift over the next couple of days. The EMAs will be relatively flat still, and we market starting to lift, and then you're looking for an entry long. because this will be another key high low as opposed to a dollar at somewhere around 130, 135. So that's a very bullish sign. Okay, so that's what I'll be looking for on the daily basis, but the weekly is going to be a concern still, just looking at that. This week we had a good leg up, pull back to the MAs, set on the MAs, lifted, maybe have to do a bit of work heading sideways. We may flush out this low to 135 again and let the MAs catch up. So we'll see how that plays out. All right, so that's pretty much everything. I think we've got through. I've only put a few on there. Is there anything else anyone wants to look at? Otherwise, we'll just call it a day. So just wait a minute there. But anyway, all I'm waiting, we'll just remember that great if you could subscribe to our YouTube channel. It'd be much appreciated. Give us a like, help us spread the word. If there's any more info you want, everything's online on support at www.tradesetup.com.au. And don't forget, if you want to join in that Discord channel, Intraday, and just hear me yabbering on about some trade ideas and trades that we're taking live, then email support@tradesetup.com.au and I'll send you off a link. All right, so for now, thanks very much for joining us, guys. Enjoy the rest of your day, and I'll speak to you again. So tomorrow we'll be in at 9:40 for the morning playbook, and we'll see how that goes. See what happens tonight in the US. If nothing much happens, it might be a fairly flat day today. So we'll see what plays out. Anyway, guys, enjoy, and I'll speak to you again soon.